Okay, good afternoon, everybody. Today is June 25th. This is the weekly take on the market. Stock market just closed a few minutes ago. I will be your host. My name is Scott St. Clair. I'm product coach here with MarketSmith. Here's the disclaimer. Take a moment to read it. Any stocks I mentioned, not buy ideas. Trying to help you to learn to do this on your own. All right, so the gauges, I'm gonna go green, green, green. It's on the fence for, I think my portfolio is very close. I don't know, honestly. Near the end, I had a couple of stocks that maybe there was some kind of rebalancing or something index wise. I don't know, but I don't. It was very close as far as green. But when I built this an hour ago, it was green. The market, it's green. It might not be easy, but it's green. The leadership, green. We're going to go with those for now. So let's go ahead and pull up the indexes. So you should see a chart of the NASDAQ composite. And this might not be perfect because the market just closed and this is delayed a few minutes, but you get the gist of it. And the volume is delayed as well. So don't read anything into that. The main thing that I see with the NASDAQ is you've got a peak here and you've got a peak on the relative strength there. Let's go ahead and draw it across. The NASDAQ made a new high there. At the time, the relative strength did not. So easier in hindsight, but that was a negative divergence, a tell that the market was not as strong as it looked, and it rolled over. Not a total surprise. Now you've got another new high, and we're splitting hairs here, but the relative strength is not as strong as I'd like to see it. I would, at least be above that peak. Ideally, it would be above that peak, but I'd prefer to be above that peak. So I don't know. I'm not enamored with the indexes. I've said it many times. Not a big fan of the indexes. I couldn't find the chart. Maybe I'll use it in the webinar that we do next week. But it's like alligator jaws. If you look at the money going in that's passive versus the money that's active, and passive is just so much money in passive that it's just waterlogged. There's really not a lot of place for it to go. And I heard a guy on a podcast saying something that was interesting. He said 38% of the indexes are made up of the kind of the go-to safety stocks that the institutions will run to. Amazon, Apple, et cetera. If they felt like the market was in trouble, these are the ones they probably would run to or do run to because they're liquid and they're a great place to hide. And if 38% of the money is in stocks that people are going to hide in, it's hard for the market to go down. But it's also hard for it to go up. I think it's a great time to be an active stock picker. I know it's kind of a it's kind of taboo to be actively picking stocks, but if there's so much money in passive, it's really, really difficult to make money in passive. You're basically just along for the ride. If you're using your 401k for mutual funds, you're just kind of along for the ride. That's why I like to do active management in my other liquid assets like IRAs and Roths, et cetera. I think it's a great time to be active investor. I think you have a chance to pick stocks because of there's very little money relative wise. There's a lot of money there, but relative. Let's look at the S&P. I don't know why MarketSmith does that. New high today, green. Nothing more to say about it. The Dow, I don't even look at the Dow, and I don't even know if I could name the 30 stocks that are in the Dow. I probably could name maybe 28 of them. I used to be able to do it, but I don't know if I know exactly which 30 are in there. It's not on my radar, not really that big a deal. Emerging markets, I watch. building this cup with handle, I find that very interesting. See if it can break out. See what it looks like on a weekly. Got a long base, so it hasn't made a high since February. What's that, 4 months? So that's interesting to me. And then last but not least, let's look at the Russell. So there's just not a lot to read into the indexes. I could give you 10 reasons to be bullish and 10 to be bearish if you force me to, as far as the indexes. All right, so what's next on our agenda? Industry groups, right? And then after that, we'll go to 3 stocks. And then after that, we're going to jump to the quote of the week. So let's just go ahead and go to the industry groups. Let's go to open stock ideas. In case you don't know how to get there, I've always just had it ready, but let's show you how to get there. Open stock ideas, switch to weekly review if you're in the daily review. And there are the 197 industry groups. The first time you do this, they're going to be in alphabetical order. So you'll want to click this column header, industry group rank right here. And that's going to resort the list. Let me pull this up. This list panel is Excel based. So anytime you click a column header, it resorts. Let's click percentage change year to date. Retail, consumer, electronics is up the most. If I were to click it again, it's going to give me the one down the most. Retail, mail order, direct. Interesting. So if I click industry group rank, it's going to bring the largest number to the top. But in this case, we want the one, we want to reverse it. So currently the worst group is energy solar, which was the best group, 18 months ago or 14 months ago. It's very strange how things have really just totally flip-flopped. You usually don't get those extremes, like oil was the worst and now it's the best, and energy solar and others were the best and now they're the worst. Let's click it again. Oil and gas exploration is one, no surprise. Denbury, CPE, LPI, Laredo, they've all made big moves. Transportation shipping is very strong. ZIM, that's been a stock that I've been interested in. ZIM is the ticker. If you move down, you got oil and gas Canadian, oil and gas drilling, oil and gas royalty, coal, interesting. International oil and gas exploration, you get the theme, right? Oil and gas is pretty strong. There's a few retail in here. Retail has actually done really well. There's some good names in retail. Nike had a great report and the stock gapped up to new highs. Lululemon's, it's coming around. I think it's Urban Outfitters coming out of a base. Crocs has been a good one. So retail has been a very good area to be interested in. What I normally like to do on the weekends is I will scan my eye down this column header, industry group 3-month, and I'm going to look for a large number like this, 86 for coal, and I'm going to work my way left, 86.98. So that's going to be like the delta. Someday, I hope, and we really would love to build in where we give you the delta, where you could just search it or see the delta where the groups are changing. That would be really cool, but we don't have it now. So you got to old school, you got to eyeball it. And that's what I'll do. I'll look for large numbers that have changed. Finance mortgage REIT 102, 79.25. So it's moving up the food chain in the right direction. And if I've not looked at finance mortgage REIT stocks, I can't remember the last time I've done that. So what I would do on Sunday is just double click this group. And so this is a chart of the group as a whole. Click on the related information panel over here and choose stocks in group. These are all the stocks in the group by market cap. Annaly is the largest, but this button down here allows me to push these stocks into the list panel down below. So I'm going to click show all component data, and Granite Point is on top. Well, why? Well, we've sorted the list for you more logically based on our process by RS and EPS. The combination of 78 and 93 is the largest number in this group. For Arbor Realty, 8780 is the second largest number. So we just add these two column headers together, and that gives you a better sort. I'm not going to look at all 38 stocks. I might look at the top 10 to 20% of the group, depending on how many stocks are in the group. But if I can't find anything to buy in 6 to 8 stocks in this list, it's unlikely that I'm going to find anything based on my process, further down the food chain. So if I just double click Granite Point, it pulls up the chart, and then the space bar, I just move my way through the list. I would hide this list. This is what I would do. And I always like to start on the weekly. I think the weekly is less noisy. And I would just quickly go through this list to look for any ideas. And if I found something, great. And if I didn't, then I'm done. I'm not going to do that next week. Next week, if I see that mortgage REIT has gone up the food chain again, I'm going to remember, oh, well, last Sunday I already went through that group and I didn't have any ideas. Or last Sunday I went through the group and I like XYZ and I have an alert on that and I'm ready to go. So that's one way that can keep you on top of these changing groups. It's a very it can be a process to do that. I have to kind of motivate myself to do this every Sunday, because sometimes it's like, do I really want to do that again? Because it takes some work, but I'm just looking for some big changes. So I might do that for 3 or 4 groups a week. And I think it's worth it. It's the only way currently to really find those changing dynamics. 3 stocks. Okay, let's start with APPS on a weekly chart. So there's no base here, and it's funny, there just hasn't been a base on this stock at all. Sometimes they don't build a base, and if you want to own them, you got to find like an alternative way to own it. If you're waiting for a base like I did, I guess this was as close as it got down there, and you just never own it, and that's frustrating if the stock is on your radar. So I kind of manufactured a buy point here going through there. So it's not perfect, but the big earnings and sales, look at the triple digit earnings and sales every quarter. That is interesting to me. And last but not least, you actually have owners and funds. You've got really good sponsorship. This is a small stock. Let's go to the weekly. 727 million. What's that? 7.2 billion. So it's not that big a company. So I wouldn't expect to see Fidelity Contra in there. But I love to see Lord Abbett. Alger small cap. They have position. So I like this. The group is very poor. Look at that, 155. But it seems to be making its move and improving in strength. Net has done really well. It's at all-time highs, and there's been a couple other stocks in the group that are holding up. This is a very large group. I think there's a lot of stocks in this group, so that will go into my thinking. Like if there's a bunch of them, then it's hard for that group to be super strong. And also, if there's just 1 or 2 stocks, that can happen sometimes, then it's easy for that stock or group to be really strong. So the number of stocks in the group was something I'll think about as far as the group strength. This is a new name that interests me, Flywire, FLWY. I don't know too much about what they do, but this is something I'm going to research this weekend, try to get to know it. Nice move from 27 to 40. We go to the weekly out of this IPO base. Just, no earnings just yet. Pretty good sales. Reminds me a little bit of Shift4. This was a really tough stock. I liked their story, but it was a really hard stock to trade. Like if you bought a breakout IPO base, you got stopped the next week. If you bought this base, you got stopped the next week. And, you're staring at 2 trades that went bad, and yet the stock went from 30 to 100. So sometimes they just don't trade like you'd like. And I wonder if this Flywire is in the same group as Shift4, finance, credit card payment. It's an interesting group to me. So I might do a little bit more research, but just a name that showed up. Last but not least, I think it's my favorite stock for market sentiment is Tesla. So Tesla is trying to break above the moving average. It'll be, the first close above the moving average in a number of weeks. If I go to the daily, you see it had a pretty good volume footprint yesterday as the stock gapped up. Today it was down a little bit, but this is my favorite barometer. I guess ARK would be a really good one as well. ARKK. It just tell a very good story of the types of stocks that we follow. But Tesla is my favorite barometer. If this breaks badly, then that's gonna be alarm bells for me. I'm not in Tesla. I don't have a dog in the fight, so to speak. But I watch it all the time. I kind of wish I probably, if it wasn't Tesla, I would have bought it there. I don't know. I just haven't done that well in Tesla. I've never been able to really get a good foothold, a good on the stock and hold it. It's kind of a difficult stock to hold, but that it's acting fine. But if it fails, that would be a tell for me. So I watch that stock because of that. Let's go to the quote of the week. I was listening to Hedge Fund Market Wizards on my phone. I love Hedge Fund Market Wizards. I think it's a very underrated book. There are some interviews in there that are not that great, that I could take or leave, but there are some that are super good. Like I've listened to Steve Clark and Como Shea and a couple of those other guys more than once. Listen to it over and over and over. And I really like Steve Clark's interview. He says, as a trader, you have to be honest with yourself to trade within your emotional capacity. I love that statement. You actually have, we all want to be Bill O'Neill and have our entire net worth in Amgen and watch it go up 300%. But if you can't handle that emotionally, and I think honestly, most people could not, most people couldn't do that, then you have to understand that. It's okay, but trade within your emotional capacity. It's the size of the position that you put on rather than the price that determines your ability to keep the position. So a lot of people, and myself included, and except in the last few years, I've spent a lot more energy on position sizing. How much should I own? How much should I try to hold on to? How much should I maybe peel off if the going gets good, rather than getting the perfect price? I've kind of gotten away from that. Like apps is a great example. It's not a great pivot point. It's not a great base, but I want to own that stock. So I'm going to own it. And then I'm going to think about, okay, how does it trade? What type of position size can I hold on to that if I get it right and it starts to work, I can add to it if I want. And position size is just everything. I really believe that. I think it's so, so important. And my experience, not everybody, but a lot of people spend a lot of energy, what's the pivot? Where do I buy this stock? What's a short stroke? What's a Jesse Livermore +3 double bottom? And so we all want to learn these really new and cool things the way we buy. It's fun. Buying is fun, unfortunately. So because you always think, well, you have a chance that when you put a trade on, that's a chance to make a huge, huge win. And so it's fun to buy stocks. It's not fun to get out of them because that's it. Once you get out, especially if it's for a loss, you can't make any money on it. So we like to spend a lot of energy on that, and I think that's the wrong approach. You want to spend some energy on that. There's definitely value in learning how to read the charts and learning how to determine the right price. Because like what Bill would say, if you get the right price, it solves a lot of your selling problems. So the right price, not the best price or the lowest price, but the right price is important. But I think this is 2, 3, 4, 5 times more important than the price that you enter a stock. All right, here's our contact information. Reach us at marcusmith.com, 800-831-2525. Next week is our Stay in Step, the monthly webinar on Thursday. And it's a holiday weekend, so there will not be a Take on the Market the following Friday. And then the following weeks, I will be on vacation. So I'm either going to have a colleague do these for the next few weeks, or just depending on how we decide, we might just, you might not see these for a couple of weeks. Have a great weekend, everybody, and we'll talk soon. Thank you.